This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 8th, 2020. Our question this week is: what is the education continuum? The answer will be provided later in the video. The market does one of three things every day: it goes up, it goes down, or it stays relatively the same. There are many possible reasons why the market goes up, down, or sideways: economic output, the price of oil, trade tariffs, interest rates, or even negative and or positive sentiment. That is the belief that things are not going to go well or that they are going to go well. This week the market was up. The Dow Jones Industrial Average increased 0.17% on Friday and was up 3.80% for the week. The S&P 500 increased 0.06% on Friday and was up 2.45% for the week. After 8 straight days of ending higher, the Nasdaq declined 0.87% on Friday but increased 2.47% for the week. Looking at the week, we can see that Friday was the only day that the market wavered even a little bit, and it was only the Nasdaq that fell. The Dow Jones Industrial Average and the S&P 500 eked out gains on Friday, but the Nasdaq, which reached an all-time high earlier in the day, closed to the downside. Markets do not go straight up, so after making new highs, the Nasdaq finally dropped a little bit. On Thursday, the new unemployment claims topped 1.2 million. However, it was better than the expected 1.4 million, so the market marched higher. And on Friday, it was reported that the economy added 1.8 million jobs in July, which was better than the 1.48 million new jobs expected. During the week, the president announced that TikTok would be banned in the US, but Microsoft was reported to be interested in buying the social media app. New unemployment claims, new jobs added to the economy, presidential declarations, and corporate purchases of other corporations are news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down, but with an upward drift. The market will continue to go up because the powers that be want the market to go up. And one of the greatest powers is the Federal Reserve. The Federal Reserve will use their massive influence to make the market go up. The fact that the unemployment new claims topped 1 million for the 20th week in a row, and that there is an escalating tech trade war between the US and China did not stop the market from marching higher. In fact, did you know the Nasdaq topped 11,000 for the first time to reach a new historic high this week? Our question of the week: what is the education continuum? The education continuum is a phrase I came across in the book The Stock Market Cash Flow by Andy Tanner. The continuum helps you understand your current education level and set desired goals related to where you want to be. The continuum moves from ignorance to awareness to competency to proficiency. Ignorance is simply not being aware of something. The purpose of the Southside School of Financial Freedom is to move you from ignorance to awareness as to how the stock market can be used to gain financial freedom. It is up to you to continue along the continuum. The stock market gains so far this year have almost no meaning to your average unemployed worker. Most unemployed workers do not own stocks. They are not aware of how to use the stock market to gain wealth and income. Are you suffering from unemployment or are you benefiting from the stock market gains? Do you own any stocks? If not, why not? Is it because the stock market might go down? The stock market will go down from time to time. Even powerhouse stocks like Apple, it declined 2.27% on Friday. But look at what it has done during this year. It is up 52.40% year to date. Have you benefited from Apple's historic run? Or do you just contribute to Apple's success by buying their products? I don't know which way Apple or the market is going to go, and I don't care. I trade the market as it is, not as it should be. I simply take advantage of the market as it is. I take what the market gives me, whether it's going up or down. How do I do that? I apply the Southside trading strategy. Learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending August 8th, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week is SLV in the second column. It increased 15.63% for the week. I happen to have had trades on it that generated cash flow and increased in value. I still own some of the ETF. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of August 8th, 2020, my portfolio is outperforming the S&P 500 ETF SPY. Year to date, my portfolio is up 17.39% versus 9.94% for SPY, a difference of 7.45%. I am beating SPY by 7.45%. This week, equities including puts, calls, and ETFs make up 56.02% of the portfolio. Cash is 43.98%. The cash flow generated for this week was 2.59% of the portfolio account value. The account value increased by 0.79%. Meanwhile, the S&P 500 ETF SPY increased by 2.47% this week. I sold 8 option contracts this week, 5 calls and 3 puts that ranged from $203.35 to $1,477.31. You can get more details, including the total dollar amount of cash flow for the week, on the website, southsideschooloffinancialfreedom.com. The Southside strategy was developed over time only after gaining foundational knowledge through experience and study. The Southside School of Financial Freedom promotes using the U.S. financial system to gain your financial freedom. In order to do that, you must RSI, read, save, and invest. RSI, Read, Save, Invest. I share my strategy for free because I want to motivate ADOS men to start thinking about the stock market and learn as much as they can about building wealth and generating income from the U.S. financial system. There are as many trading strategies as there are traders because even when people use the same strategy, their results will differ. They differ because of timing, application, and risk tolerance. The Southside trading strategy is a cash flow strategy. The objective is to generate income every week. It does not appreciate every week. That is, the value does not always go up, but it always produces cash flow or income. Think of it this way: do you buy a house to flip it, or do you buy a house to rent it out? The Southside strategy is akin to buying a house to rent it out to generate income. What is the objective of your strategy? Please use the Southsides as an example of what to do or of what not to do. Ultimately, if the Southside strategy proves not to beat the S&P 500 index, then you will know what not to do. The Southside School of Financial Freedom is open to your questions and critique. Please comment below. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing can free you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia. Available on lulu.com and amazon.com. Please like, share, subscribe. ADOS.